All right, good morning, everybody. Let me make sure that I am live on YouTube. Make sure that I've got everything unmuted. How are you guys doing today? Good morning, Claire. Nice to see you. Josh, CJ, Jason, nice to have you guys here today. Hope everybody's doing well. Um, you guys ready? Focus on some rules, study some patterns, create some expectations, have a good time. That's what we're going to do today. Guys, I'm Mark. Good morning, Zeba. I'm here to answer your questions. That is my sole purpose in life, is to help you understand and read your indicators, get comfortable with what you're seeing so that you can move forward with the software and get to where you want to be. But before we get into software, the first thing we're going to do is we're going to check news, guys. We're going to take a minute and we're going to go to forexfactory.com and make sure that there's not any big news releases that might create spikes in the market or erratic behavior or anything like that. And you can see that today, Wednesday, February 22nd, there's the G20 meetings all day long. 2 o'clock FOMC meeting minutes, 5:30 they're going to talk. Williams is going to speak. There's no, at the moment, high impact news, but there is at 2 o'clock FOMC. So a lot of people are going to be waiting for that. If you're in the markets around 2 o'clock, make sure that you're aware of that high impact. It can make the market move erratically. And then we go, of course, everything that I talk about, guys, comes from the education page. Every time we talk about a rule, you'll be able to find it on the education page. Every time we talk about a pattern, I mean, everything is going to be right here for you guys. And there's two sections off this education page that I like to take a look at. First one's a software user guide. This is your NinjaTrader how-to. If you are trying to connect, to open, to scale your charts, to put together stops and targets, everything that you need from a NinjaTrader standpoint with the software is going to come right here from the user guide. Always a great idea. Scroll through, take a look, click on it, follow the links. Practice with your NinjaTrader. Practice scaling your charts. Practice entering. Practice setting up ATMs, targets, all that good stuff. And then the other section, and guys, this is where everything that I talk about comes from, is the education page, the tutorial section. And this is going to cover the rules that we discussed. This is going to cover entering and exiting. This is going to talk about what those bars on the market flow mean if you're moving that direction with your trading. It gets you a little description, Nexgen, the Discord chat. If you're uncomfortable with it, scroll through and take a look at it. But basically what I really want to point out first is to remind you guys that for 30 days, as a brand new user for 30 days, focus on the best of the best. Focus on the highest probability trend trade that we teach. And when we talk about a high probability trade, it means that every indicator on every chart is lining up for the trade rules. Strongest triggers, nothing in the way, room to your profit targets. All of these advantages come together, and it's going to be, whoops, that's the wrong picture. We're going to focus for 30 days on 3 simple rules. We're going to focus on the advantages that those 3 rules give us. And by doing so, by keeping it simple, by letting yourself be new, it's going to teach you one of the greatest skills that you can have when you're looking at software, guys. It's going to teach you to read your chart. And I want you to think of yourself as chart readers. Don't be a day trader yet. Be a chart reader. Learn how to take the information that's being given to you, to open up your charts, to look at it, and to understand 3 essential elements. You'll be able to look at them and understand where the market is likely to go. You'll be able to understand where the market is likely to stop, and you'll be able to understand where the market is likely to continue. And you're going to use these 3 points, these essential elements, to make decisions, to recognize advantages, so that you can take that high probability trend trade, so that you can be a chart reader. Because 90% of what you do during the day is going to be reading your charts. 90% of your day is spent looking at indicators and understanding whether or not there is an advantage had. And if the advantages are present, then you're going to take a trade. That 10% becomes your trading. So once again, we're going to focus on 3 rules, 3 simple advantages. And guys, this gives you the equation for a trade. A trade is momentum, a trade is a clear path, and an entry area. And those 3 key elements combined get you into that high probability trend trade. And these 3 rules are going to happen on 2 charts. Remember, simplicity is key. Simplicity is going to keep you focused on what's important. Simplicity is going to give you recognition of the best of the best. The first chart that we're going to look at, guys, is a 13-2. This is a larger, slower chart. And on this 13-2, it's like a broad stroke of a brush, like you're painting the side of a barn. You're going to understand through only one bar quite a few advantages. You're going to understand the overall trend of the market. If the background on your 13-2 is green, we're in an uptrend. If we're in this uptrend, we're only going to be looking for rules to be met for high probability trend trades long. If the background on this 13-2 is red, we're in a downtrend. We're only looking for rules to be met for high probability trend trades short. Giving yourself the advantage of trading with the trend is really going to be the first advantage that you're giving yourself as you look for this high probability trend trade. You're also going to recognize the first 2 rules. There's only 3, but the first 2 rules are met on that 13-2. Rule number 1 is going to give us strong triggers. Those strong triggers provide us the advantage of momentum. Rule number 2 is going to give us no termination conditions, which means that we're going to have the advantage of a clear path. And when those rules are met, when we get that information on the 13-2, guys, that's when you're going to turn your attention to the 5-1. That's when you're going to look at your entry chart. And your entry chart is where you're going to refine that broad stroke of a brush that the 13-2 provides. You're going to be able to take that overall synopsis of the market, and you're going to be able to use rule number 3, where you buy or sell a pullback at an area inside of favorable large triggers. And rule number 3 is going to give you that advantage of an entry where the market is likely to continue. And when you piece these together, the advantage of momentum, nothing in the way, and entering at the area where the market is likely to continue, it's going to allow you to reduce your risk, and it's going to allow you to increase your profit potential. So 3 simple rules, guys, on 2 charts. And I want you to embrace this simplicity, please. Rule number 1 says that I have to have the advantage of momentum. Well, the advantage of momentum means that I have strong trigger lines, and strong trigger lines let me know that the odds are favorable for the market to continue up or down. So in an uptrend, when the background is green, when my small triggers break above the large triggers, when the large triggers are wide, they're angled in the direction of the trend, guys, this lets me know that the odds are favorable for the market to continue up. That space between small and large triggers is what lets me know that I have that momentum advantage. In a downtrend, small trigger lines break below the large trigger lines. The large trigger lines are wide, they're angled in the direction of the trend. Good morning, new trader. This look right here lets me know that the odds are favorable for the market to continue down. And guys, as a brand new user, I want you to embrace that advantage of momentum, because when it goes away, when the small triggers work their way inside of the large triggers, we call this a weakening of the large triggers. And when that large trigger is weakened, anything can happen up or down. We lose the advantage of momentum. You're going to recognize that that advantage doesn't stay constant throughout the course of a move. From the point where the small triggers break away from the large triggers, break above, create space, until they return, guys, this is when the momentum is advantageous. This is when the market is likely to continue in the direction of the trend. And you'll notice that on a 13-2 chart, if you scroll back through, you're going to see these tails you're going to see these wicks right at the bottom of the bars, and these wicks let me know that there was a potential entry on my smaller, faster chart. So we're going to start off simply by recognizing momentum on the 13.2. And you're going to look for instances when the smalls are below the large, when the large are wide, they're angled in the direction of the trend. You're going to be able to circle these tails and understand that there was in fact a potential entry. And it looks like there wasn't a lot going on this morning. I'm looking for one of those spots, and I'm really not seeing them this morning, and that's okay, because patience is a big part of what we're doing, right? 90% of what we do is going to be looking at our indicators, reading our indicators, and waiting for those advantages. So while the market sorts out and opens up, give me a Y in the room, new traders, if you're with me. When the smalls break away from the large, when the large are wide, they're angled in the direction of the trend. That space created lets me know that the momentum is favorable. I have odds favorable momentum for that market to go. Awesome. So guys, this is where everything starts. It starts with momentum. And then we have to make sure that we have a clear path. And we do that by recognizing where the market is likely to stop. And that's a termination condition. And termination conditions are a comparison of areas in the trigger lines, guys. The areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low lines, magenta high lines. All of these areas on your 13.2 chart can be potential termination conditions. So there is a simple process of recognizing when we've reached an area that's likely to stop the market. Let me pull this picture down, and guys, I'm going to go right back to the user guide, right back to the instructions from the website. And we're going to incorporate a little two-part process, guys, to recognize if an area is likely to stop the market. If we've reached one of those areas where we should no longer take trades into it. It's a two-part. Price reaches an area of support. Price reaches an area of resistance. Price reaches 1-to-1s. And when price reaches this area, I have to ask myself, where are those T3 trigger lines? Well, if all of my trigger lines remain above this area of support, this area is likely to stop the market. This is an area that I'm not going to take a trade into because it may reverse the market. It may stop the market. So price reaches an area. When price reaches the area, the trigger lines remain above support, below resistance. We've reached an area likely to stop the market. The rules say wait for an area to break. Wait for the advantage of a clear path. So if a termination condition removes our clear path, when both the small and the large triggers break through an area, we consider that area to be broken and we resume the advantage of a clear path. So up top you can see price reaches support. None of the trigger lines have broken through, but when both the small and the large break through, we have that odds favorable momentum. Guys, we have the advantage of a clear path once again. And this is going to repeat itself throughout the day, all day. Price reaches resistance. None of the trigger lines have broken through. Not looking for long trades because we've reached an area that may stop the market. Price pulls all the way back to support. Not looking for short trades because all of the trigger lines have remained above that area of support. 90% of what you're doing is going to be reading those indicators and waiting for the advantage. How many points from a price and termination conditions? Josh, what I like to think is a tick or two, not a point. See how price comes all the way down, one tick away from this area of support, all the trigger lines are above. For me, that's good enough because these Fibonacci areas come together through an awful lot of calculations. They come through all the pivots in the market over a historical time frame, building synthetic time frames, moving forward, moving backwards. And there's this giant mass of Fibonacci calculations that the software weighs and sorts to create these areas of support and resistance. So one tick off and all the trigger lines above, I'm going to call that a termination condition. And remember, just because we're close, if we're 3 or 4 ticks off, it's really not the area reached yet. But when we get right up on it, I'm going to start that comparison. Can't go long into resistance, can't go short into support, and then guys, we have a retracement all the way back up to resistance, all the way back up to a divergence high, all the way back to a second resistance. Once again, all of your trigger lines remain below. This is a termination condition, so no longs, no shorts, no longs. But this termination condition creates a full reversal. It gives those large triggers from green to red, and it creates odds favorable momentum. Guys, this termination condition that creates a full reversal is what we call a strong top. And a strong top is the key to that first trade that we're looking for that high probability trend trade. When you're focusing for that first 30 days on the best of the best, you're focusing on that 5-1 trend trade after a termination condition on the 13-2. We see it from bottoms as well. Price accelerates with odds favorable momentum all the way down to those 1-to-1s. When price reaches the 1-to-1s, you ask yourself, where are those trigger lines? Well, they've all remained above. Therefore, this is an area likely to stop the market. No more short trades. And when this termination condition creates that full reversal, gives us the odds favorable momentum, guys, then you'll notice there's one of those tails, right? There's one of those potential entries on a high probability trend trade that comes from a termination condition on a 13-2. So do me a favor, give me a Y in the room if you're good on this basic run through to create. Price reaches the area. If the trigger lines don't break, well, then we're not trading directly into it. If both the small and the large get above the area, get below the area, we consider that area to be broken, and we once again have that clear path to hopefully take us to that next Fibonacci area. There's going to be instances where the market seems to turn from nowhere. It seems to have this pivot that doesn't come from an area. It's not fibs, it's not 1-to-1s. Maybe there's even odds favorable momentum and it seems to turn from the middle of nowhere. Guys, there's one more termination condition that you'll recognize on a smaller, faster chart, and that's 3 divergence in the same location. And all this is 3 losses of momentum. When divergence prints, it means that momentum isn't following price. You'll see it as a negative number. You'll see it as a cyan divergence low line from a low, as a magenta divergence line from a high. When you have 3 divergence in the same general location, it can end a trend. It becomes even more powerful when your small triggers go from odds favorable to anything can happen, and it becomes more powerful still when that third pivot is higher than the previous from a low, because it means that not only are we losing momentum, but price can't even reach that one that they got to previously, or price, that third pivot is lower than the previous from a high. So guys, you're going to recognize 3 divergences as a potential trend ender. This low with 3 divergences, this high with 3 divergences is going to give you an indication when the 13-2 looks like this, that the market may be reversing, that trend may be ending, even if it's momentarily. So we're going to look for terminations primarily on the 13-2, and then the only termination condition we're going to look for on a smaller, faster chart is going to be that 3 divergences in one location, guys. Is everybody with me on this? And remember, all we're doing is piecing together a trade. A trade is momentum with strong triggers. A trade is a clear path, no termination conditions. And now we're going to take a look and you're going to see how you're going to be able to define where that market is likely to continue. That area inside of favorable large triggers on a smaller, faster chart. And we're going to do that, remember, with the 5-1. And we're going to refine that broad stroke of a brush, guys. During the live market, this is going to be the look of your 5-1. Triggers going up strong, right? Large triggers, wide, angled in the direction of the trend, coming up like a shark to breach. Price bars going in the direction of the trend, green bar after green bar in this uptrend. All you're doing now is you're saying my rules are met. I'm going to focus my attention on the smaller, faster chart, and I'm going to look for an area. And an area can be a fib, it can be a mid-band, or it can be a 1-to-1. And I'm going to look for those areas that may fall within these large triggers, because rule number 3 says we're going to use a limit order. We're going to wait for the market to come back to us. And we're going to use that limit order to buy a pullback, a small retracement in price. And we're going to place that limit order at an area, either fibs, mid-bands, or 1-to-1s, inside of favorable large triggers. And favorable large triggers mean that both your large and synthetic are trending one on top of the other. They're both strong and in the direction of the trend. This is your best of the best look, because favorable large triggers trending one on top of the other are going to create a small window of opportunity. And your window of opportunity is defined, whoops, wrong picture. When the pullback begins, use a limit order to buy a pullback at an area inside of favorable large triggers. A pullback is just a small little retracement in price, guys. When your large chart says that you have momentum, when your large chart says that there's nothing in the way, that large chart is like a large crowd. It's that general consensus. And we're going to get a couple of those small group people telling us that they want it to go down when everything's going up. Nexgen users, you're going to be able to take advantage of that little retracement that starts with a reversal bar. And you're going to identify your areas inside of favorable large triggers. And this is going to become your window of opportunity. That area where the market is likely to continue from your highest point of support to your lowest point of support inside of favorable large triggers. Your job is going to be to activate a limit order right at the top of that window and to wait for the market to come to you. We don't chase price, right? And if that market pulls back, remember, it's pulling back with the advantage of odds favorable momentum. It's pulling back with the advantage of a clear path, and it's pulling back to the area where it's likely to continue. Guys, you're now in a trade at 79.21. You're in a long trade with all those advantages. This is your best of the best, guys. For 30 days, I want you to focus on nothing but entries. For 30 days, I want you to focus on getting into the market at the correct spot. Because when you do, trades become manageable. Your initial stop is going to go below that window of opportunity where the market shouldn't go. And guys, this is a trade that when you learn to execute it, when you learn to follow the rules, typically wins 70 to 80% of the time. 70 to 80% of the time, the odds are favorable that it's going to be profit target reached. Because we wait for the pullback, risk is minimized. As it moves in the direction of the trend, we can minimize even more. Because we waited for the pullback, the distance to our profit target is increased as well. So guys, we're going to practice this one for sure. We're going to look for areas. What do we see right here? Price has reached an area of support. Absolutely none of the trigger lines have broken through that area of support. We're currently at a termination condition on the 13-2 chart. We're in a position where we're telling ourselves no more short trades because this is an area that may stop the market. You'll also notice that we've got 1, 2, 3 divergences over here on the 5-1 as well. The small triggers are inside. Still too soon for a long trade, but we certainly have the information that we need to not go short into this area likely to stop the market. Give me a Y in the room if you're with me. In order for this area, for shorts to continue, guys, we want this area to break. We want to see the small triggers come below the area. We want to see the large triggers follow. In the moment, no short trades, but because we don't have odds favorable momentum up, there's no long trades. You're sitting on your hands and you're waiting for those advantages, right? This is crude oil. Crude oil's open now. We have small below the large. We have large, wide, and angled in the direction of the trend. Guys, with a reversal bar, we can create a window of opportunity. So if I look from my highest point in the triggers to my lowest point in the triggers, my job is to identify areas, right, within this window, which means that my lowest point of resistance is this midband and my highest point becomes this Fibonacci. Midband's the lowest, Fibonacci resistance is the highest. Guys, you're identifying where the market is likely to continue. Give me a Y in the room if you see it. There's your reversal bar. Signals the beginning of a pullback. This isn't a high probability trade. This is a medium probability trade. This is a trade where the small triggers have made it through support. The large triggers have not made it through support, which means that this is an area with the potential to break. But this is not an area that's broken, right? This becomes a medium probability trade. What's a medium probability trade? A medium probability trade, guys, is what you're going to start seeing after you spend 30 days working on that high probability, learning to read your charts. And a medium probability trade is when most indicators line up for a trade, but a small issue may exist. Your ability to read charts is going to recognize that small issue. In the case on crude oil, it's an area with the potential to break with odds favorable momentum, but it hasn't yet broken. When executing medium probability trades, you're going to take them, but you're going to manage them assertively. You're going to use chart reading to manage these trades assertively, which means that you're going to be able to look at divergences on a smaller, faster chart. You're going to be able to identify trouble spots, and you're going to be able to give yourself the advantage of being able to manage assertively because of the chart reading that you've understood from your higher time from your study, from that first 30 days. So Josh, smalls are through, large are not. This is an area with this momentum that has the potential to break, but it hasn't broken yet. That's your small issue that exists, right? Your window of opportunity, should you decide to take a medium probability trade, extends from the midband really to this area of resistance. If I want the area broken, Josh, absolutely. An area is broken when both the small and the large pass through. Until both small and large triggers pass through this area, this is an area that isn't broken. This is an area that only has the potential to break. It hasn't broken yet, which means that we're not looking at a high probability trend trade. We're looking at a medium probability trade. Yep, both large lines, absolutely. So these triggers they're a set, right? Two flat lines, no texture, are the small. Two lines create the large. In order for an area to be broken, both lines of each trigger need to be through that potential area. Does that make sense? So all we're doing now is we're looking at an area with the potential to break, right? You're coming from a termination condition that creates a full reversal. I like that. I've got triggers one on top of the other. I'm a fan of that. And you'll notice that as price moves down and works its way through, your window of opportunity has gotten smaller and smaller. You have one area inside of favorable large triggers and only a mid-band. And when we talk about potential entry spots, your focus is on that one area inside of the favorable large triggers. The one that is below, let's get a good one, below the top of the triggers, above the bottom of the triggers, that Fibonacci, that mid-band right in there, right? Why would you bet divergence prints? Sounds to me like you've got a crystal ball, Paul. Fibonacci resistance is not in the window. One-to-ones are not in the window. Fibonacci resistance is not in the window. Fibonacci resistance is not in the window. So what gets you is if crude oil breaks through the fibs, then it creeps on the next termination condition with a small window of trading. So what does that mean, Josh? It means that maybe it's not your trade, right? But remember, and let's look at this. We're losing momentum. We're losing momentum a little bit, but don't we have an area of resistance inside of favorable large triggers? Josh, this is, I think, a question that a lot of people have when you talk about the distance. And let's do this again. Initially, your brain says, well, Mark, I've only got 5 or 6 ticks to get to that next termination condition, right? But remember that we are buying or selling a pullback, which means that that 5 or 6 ticks extends all the way from the point of entry, not from the bottom of the bar. Does that make sense, guys? There you go. And Josh, that gets a lot of people in the beginning. You're gauging how much room you have from the bottom of the bar and forgetting that we're trading from where that potential tail's coming, from that area of resistance inside of favorable large triggers. So what it does is it gives you a lot more room to that target. Nope, your window, Josh, is the area of resistance inside of favorable large triggers. Your potential for profit is the distance from that area to the next. That's okay. But I'm going to clarify for everybody in the room just so that we're there. But you're absolutely right. If you have 20 ticks distance to get down, then you have the ability to make $200 on that trade. Or if you're trading a 2-lot and you're keeping it conservative, you have the ability to make $300 on that trade. And that's what we're looking for, right? Looking for the ability to have the room to make money. Guys, all of your triggers are below resistance, right? They finally made it. If the market continues down, now we can use Fibonacci to determine where the market is likely to go, right? On the 13-2, if we have 20 ticks from the termination condition, then the pullback happens on the 5-1, which creates more. Ooh, Josh, you're thinking a lot. So what you're saying, I'm not sure. I want to make sure that I'm following you. You're saying that if this price bar is 20 ticks from, so the bottom of this bar is what, 47? Are you saying that I need it to be all the way down here to 27, 40 ticks? Or are you saying that if my entry inside of favorable large triggers is at least 20 ticks? So for instance, from 63 to 41, is 22 ticks. How do you feel about that trade? Is there room to make profits? Awesome. So guys, the second half, trigger lines are returning a little bit. I've had one slowdown. I've had a second slowdown. I have anything can happen triggers. The 5-1 is giving you an indication that the market may want to push up higher. See how the smalls have returned to the large? See how we have multiple divergences? See how the small triggers are inside? Guys, this is going to become your management opportunity. What I'm looking for you guys to do in the beginning, though, is show me this entry. Show me that you can identify where the market is likely to continue, and what's going to happen is these entries are going to create manageable trades. These entries are going to create a scenario where you can get in. Guys, remember that I said this is a trade that typically, if I take 100 trades, wins 70 to 80. Guys, what's the other side of that coin? If I have something that wins 70 to 80% of the time, how often does it lose? 20 to 30, right? So what does that mean? That means that you're taking a trade that provides you a statistical advantage. You're taking a trade that has been back tested, that has been studied, that has been looked at, and over the course of 100 trades has proven to win. Look at this, guys. 3 divergences, 1 location. And they keep getting higher. Isn't that a great indication that things may be changing? So your job as a brand new user, is to go through this process for 30 days. 20 trading days. Let's make it seem not so intimidating. Getting yourself to where you can always recognize large triggers giving you the advantage, or triggers giving you the advantage on that 13-2. Identifying strong trigger lines without hesitation. Guys, on the 13-2, are they strong or are they weak? Let's use the real market, right? Odds favorable momentum? Absolutely. Small triggers are through the area. Large triggers are not. Is the area broken or does it have the potential to break? It has the potential. And now let's look at this, guys. I have a slowdown on my 5-1. I have a divergence on my 5-1. That's my second divergence. I've got flat large triggers. They're split. They're not trending one on top of the other. How do you feel about an area with the potential to break when your 5-1 chart is giving you indications that the market is slowing? Feels like it takes away an advantage a little bit, right? The triggers are up. They're on the other side. So guys, this is what you're going to do. This is chart reading. If an area only has the potential, and the smaller chart tells you that that potential is going away, you don't have to hope. You can wait. One or two things are going to happen here, guys. Either this area is going to hold, trigger lines are going to roll, it's going to create an opportunity for long trades, or the area is going to break, the momentum is going to maintain, and it's going to create opportunities for short trades. In the moment, you don't have an advantage either way, which means that you're in that 90%. You're in that chart reading phase. Does that make sense, everybody? This is what we're going to do every day, each and every day. We're going to look at the live market, which really isn't giving us much right now. We're going to talk about rules, anything can happen triggers, multiple divergences. See how this works? All we're doing is reading the charts, waiting for advantages. And when the advantages present themselves, we're going to build the ability to recognize the entries based off of the advantages, right? So that we can take a trade. But our trade for the first 20 days, first 20 trading days, first 30 days of your career with Nexgen is this equation. And that's it right there, New. It's buyers and sellers fighting to get control. The great thing is, as a Nexgen user, we can identify when that fight robs us of momentum. We can identify when that fight is taking place at a key area, and we can identify when those advantages aren't there, when they're not present. This is crude oil. Anything can happen triggers, even though they've broken the areas. Multiple divergences. Buyers and sellers duking it out. Rules not met. Next-gen users sitting on your hands, not forming opinions. Area with the potential to break. Multiple divergences. And that area didn't break, did it? Didn't break. Absolutely. So Joel, small window of opportunity starts with your large triggers, your synthetics overlapping, one on top of the other. Why does that create a small window? Because there's less room for there to be areas inside, right? 1-to-1s are not in that window. Fibonacci support is not in that window. When they overlap, it creates a smaller window of opportunity. So let's go through. I've got some pictures. Here's short trades, right? Everything says down. When the reversal bar starts to pull back, this red box identifies from the top of the large triggers to the bottom of the large triggers. Does everybody see that? The red box isn't our window of opportunity. The red box is where those triggers are, one on top of the other, letting me know that I have favorable large triggers. My window of opportunity is going to be from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Do you notice how the only line, the only area inside of those triggers is a midband? Guys, the shaded area is the place where the market is most likely to continue. And sure enough, it did, right? From the bottom of the triggers to the top of the triggers. The areas inside, like it's a sack to carry those areas. These are outside of that window, right? These are outside of those trigger lines. That doesn't qualify as a window of opportunity. Go in the other direction. Large and synthetics, trending one on top of the other. Get in the habit mentally. Draw that box from the bottom of the triggers to the top of the triggers, and then your window is the areas within. Guys, give me a Y in the room if you're with me on this. Because when you learn to recognize this window, when you learn to take trades from this window, you're going to reduce your risk, and you're going to maximize your profit potential. Should we look at another one? And guys, you can do this all day. From the top of the triggers to the bottom of the triggers. My window of opportunity, there you go, Claire, is that area that falls within. These 1-to-1s aren't inside of that window, are they? Therefore, it's not an area where the market is likely to continue. And guys, I do this all day long. All day long, all I'm doing is I'm waiting for the advantages on the 13.2. And guys, this picture shows you why we refine that 13.2. What happens on one bar on the 13.2 is this entire pullback, this entire move. This box, one bar on that broad stroke of the brush, is this box on your 5-1. This is that refinement process, right? Identifying momentum, no termination conditions, looking for our triggers and looking for the area within. Taking advantage of that small chart mentality, that small crowd mentality to push you back to the best of the best spot. Smalls above the large, no termination. From the top of the triggers to the bottom of the triggers, window of opportunity. Guys, you're going to do this every day. Every day you're going to open up the live market. Every day you're going to go back and you're going to circle tails. Here's a circle, right? Small's below the large, larger wide, angled in the direction of the trend. Did this tail come back to an area of resistance inside of favorable large triggers? No. So rules not met, right? Not a trade, guys. You're going to ask yourselves, and you're going to ask me a lot, hey, Mark, was there a trade here? Hey, Mark, did I miss something? Hey, Mark, did I miss a trade? Well, let's look at this one right here. Small's below the larger wide, they're angled down. Here's the tail, but price reached support, and absolutely none of my trigger lines broke through. Termination condition, right? 3 divergences in the same location. Termination condition. Guys, did I miss a trade? Rule number 2 is not met. No. And this is what you're going to get yourself in the habit of doing, guys. Either the rules are met or the rules are not. There is no I hope. There is no I want. There is no let's see what happens. There is either rules met or rules not met. Guys, small's below the area, the large haven't broken. There's a pullback. Did this pullback make it to an area of resistance inside of favorable large triggers? If I create the box, right, from the lowest point to the highest point of the triggers, where is my lowest point of resistance to my highest point of resistance? Guys, price didn't make it. Rule number 3 is not met. Not a high probability trend trade. And what's incredible is you're going to start to do this almost instantly. You're going to start to recognize this in the moment to the point to where these entries become pretty easy for you. So let's do it again. Small's above the larger wide. They're angled in the direction of the trend. Let's see what this circle looks like. That was 7:30. All right. So guys, this circle, small's above the larger wide, they're angled in the direction of the trend. Did it pull back to an area of support inside of favorable large triggers? Joel? Here's the top of my triggers, here's the bottom of my triggers, right? This is why we do this. Is there an area inside of those favorable large triggers? Absolutely there was, guys. This was a trade. This was a rules-based trade. So what happens, though? 1 divergence, 2 divergence, 3 divergences. Do you see it? 3 divergences in the same general location might terminate a trend. Even more powerful when the smalls are below the large or inside. Guys, I took this entry. And when 3rd divergence printed, I took my exit. Because my rules say that if a termination condition is present, it's no longer a trade. And let's see. There was my entry. Small's above the larger wide, they're angled in the direction of the trend. There was a pullback to the area of support inside of favorable large triggers. And when I got 3 divergences in the same general location, when my small triggers were inside of my large triggers, it became an exit condition. I used the small chart to manage when the termination condition became present. And guys, sometimes the market doesn't care and it spikes right up afterwards. But the key is to be consistent. The key is to recognize when your rules are met, and when your rules are met, to have the confidence to take that trade. Smalls above the large. The smalls are breaking through the area. This was 5:55 this morning. I'm going to scroll back. Did the market pull back to an area of support inside of favorable large triggers? What do you think, guys? Absolutely. This pattern repeats itself every day. This pattern creates advantages of momentum, advantages of a clear path, and this pattern creates advantages of taking an entry where the market is likely to continue. Guys, your job as a brand new trader is to come back and circle these tails when the rules are met. Once again, I'm going to ask you, did we get a pullback to an area of resistance inside of favorable large triggers? Absolutely. Do you see what I'm doing? Smalls made it through the area. Large triggers are down and wide. Areas of resistance. This pattern repeats itself over and over and over. Guys, this is your homework. If you're brand new, I want you to go back and circle all these tails when the rules are met. Did this circle pull back to an area of resistance inside of favorable large triggers? No. So new trader, was it a trade for a brand new user? No. All day, every day, guys, this is what we're going to do. We're going to keep focusing on the advantages of momentum, the advantages of a clear path, and we're going to focus on the advantage of entering where the market is likely to continue. That's a little rougher one, but it pulled right back, split triggers, a lot of distance on the triggers. Not the best look, but a potential opportunity. Guys, repetition is key, and I can't stress that enough. Hey, Mark, I'm having trouble seeing this. Well, you've only looked at it 20 times. Imagine how it's going to look after 200 times. Imagine how it's going to look after 2,000 times. Practice makes profit. Ooh, I like that. I'm going to use that. Guys, you have two tools at your disposal that are going to make your life easier. The first one is your ability to take pictures. Your ability to put a picture into the room and get feedback. Guys, 1, 2, 3 divergences. Third divergence is lower. Small triggers are below the large triggers. This is a market with the potential to push lower, isn't it? Chart reading. And there it goes, pushing lower. Guys, you have the ability to take a picture, to hit that capture button, and to snap a picture of a chart. And here's the best part, guys. There's a call out button. Hey, Mark, answer every question I have because I want to be a great chart reader. This is your job, is to take a picture, to post it in the room, to ask a question. My job is to answer it. My job is to give you feedback 15 hours a week, live, every day. Every time you see something, take a picture, write a question. Suhas, the divergence number only indicates that divergence is true. And I want you to think about this. When this number prints, there was a loss of momentum. That's all it means. Well, it has the potential, Suhas. I want you to embrace the word, it may go down. It has the potential to go down. I don't know, Ziba, I can't see your chart. Maybe you're looking at a different market. Maybe we're looking at different charts. Take a picture and show me. So guys, that was Exhibit A. You can say, how come I don't see this in my house that you can't see? Or you can take that picture and click Upload. There you go, Ziba. Copy the link. And guys, get it in the room. Get yourself in the habit on day one Instead of Mark going, people type in the room, hey, Mark, is that a termination condition? Well, good gravy, Paul. I can't see your chart, can I? How could I possibly know? So I want you guys to start taking pictures. If you need help taking pictures, I want you to raise your hand. I want you to go to the software user guide, and I want you to read this. Before you tell me that you can't, I want you to read this because you can. It's just new. Bring me your questions, guys, every day, because your path to becoming a confident trader ASAP, ready? Your path to becoming a confident trader ASAP is posting pictures in the class and tracking your trades. Mark, on NT8, your connection should be on simulated data feed. No, Jose, it'll be on your live data feed. Remember, global simulation mode. When global simulation mode is checked, it'll keep you in simulator. So I can go to my NinjaTrader 8 just like NinjaTrader 7. And if I'm connected to the live market, if global simulation mode is checked, Jose, it's going to keep you in that simulated. It won't give you access to a live account. Same is true NinjaTrader 7 or 8. All right, guys, I see a lot of you posting pictures in here. This is awesome. I want you to do me a favor. If you're brand new, take a picture, post it in the room. Suhas, just to get back on the answer, before I take a little break here, 3 divergences in the same location may terminate the trend. What divergence tells me is that there's a slowdown in momentum, that the market is pushing down but momentum isn't following. So 3 divergences may terminate the trend. It's not guaranteed because we have no control over the market. What we're doing is we're creating an awareness of a pattern that when we've studied it a million times has the potential to push it the other way. Absolutely. Same thing, either direction, but the actual number doesn't matter. Either divergence is true and it prints or divergence isn't. There's either a loss of momentum or there is not. So don't worry about the numbers. But when it prints, know that there was a loss of momentum. And then we can use those losses of momentum to identify when the market may push lower, just like it has. Absolutely, Suhas. There are 0 absolutes. All we do is we trade patterns that give a statistical advantage. And we've spent 27 years putting those together. 25 years, I believe, Nexgen, putting those together. Guys, I'm going to take just a minute. When I come back, we're going to start looking at all these great charts that you're posting. If you have questions, take a picture, type it on the picture, post it in the room. If you've never posted a picture in my room before, guys, take a picture, post it in the room. I don't care what it is. It can be a picture of your dog. I love puppies. But post that picture. Show me that you can do it. And if you can't, let me know so that I can give you help. Guys, I'll be back in about 5 minutes. Cruella de Vil, CJ. Cruella de Vil does not love puppies. Guys, look what happened in the market. 3 divergences in the same general location. It may push the market the other direction, and great googly moogly, it sure did. Guys, patterns, patterns, patterns. That's what we're doing every day. As we come into these one-to-ones, remember that the formula, price reaches an area. We haven't quite hit that area. Where are the trigger lines? Well, we haven't made it yet, right? So can't we start looking with that odds favorable momentum? If I get a reversal bar, can I go from the top of my triggers to the bottom of my triggers first, and then take that box and let's squish it? Let's take it to the lowest point of resistance, to the highest point of resistance. And if we don't reach those one-to-ones, guys, can't we say this is an area where the market has the potential to continue? Where it's most likely to continue in the event of a pullback? That's all it is. It's just patterns every day. Guys, I do not call trades in this room. I don't tell you what to do. I don't tell you how to trade. That's not my job. My job is to help you identify patterns, to help you write a plan so that you have a concrete set of rules that provide an advantage so that you can practice them every day. New trader, I just tried to open your link, but I think it was just a picture of the link, the one from 913. All right, Safia, let's see what you were doing today. Safia, you had odds favorable momentum. You hadn't quite reached the termination condition. You enter at the resistance right there at the large triggers. Well, Safia, where's your entry? Is it up in these large triggers with no areas at all? Or is it at a mid-band inside of favorable large triggers? Do you see how you fudged rule number 3 just a little bit there? It worked out for you. But it's important to remember, right? And then this one never got to an area inside. Not a high probability trend trade. And you kind of fudged your rule a little bit. I'm glad it worked out for you. But remember, consistency is the key. Always practice like you want to play, guys. Always practice. Take the trades that you want to take when you're trading live money. All right, new trader, let's see what you did here. Guys, I'm starting at the top, which means that I'm scrolling back and forth. Rule 1 and 2 passed. There's a pullback. I see a circle. That circle is directly at resistance inside of favorable large triggers. Indicators get through the fib. The fib area breaks. Sell at the midband. New trader, am I reading this right? When you say buy at the fib, you mean exit your trade, yes? You don't mean go long. Just want to make sure that we're on the same language there. Okay, awesome. This is beautiful, isn't it? New trader, you had the advantage of momentum. You had the advantage with absolutely nothing in the way. And you had the advantage of identifying where the market was likely to continue and where it was likely to go. Can you just practice this for the next 30 days? Make it second nature, get that muscle memory? Because this is a great trade. And you know what I like to do when I see these great trades, guys? I like to steal your link. And I like to go to my spreadsheet. Guys, everybody has this one. And I'm going to put this link, new trader, directly into my spreadsheet in the section where I have all my pictures of perfect high probability trend traders. And I'm going to give you credit, and I'm going to come back and study that one because I want to make sure that I can do what you do. Nice trade. Very well executed. And what a great chart read. All right, let me get to my next pictures. Gary fighting triggers, fighting trend, fighting everything. And I know that one got run over. Fighting triggers, fighting trend. Wait for the smalls to be going up like a continuation long. Absolutely. The difference between an area that may hold and an area that is held is going to be the difference between getting run over and being with the advantages. And then John giving you a continuation picture there. If the trend trade doesn't work, let the triggers roll. And that's exactly what he was saying. Guys, there's a lot of great information in the traders chat room. It tends to be a little more advanced. Paul, you smart aleck. It did print, didn't it? But that was an opinion until it happens, wasn't it? It's just an opinion until it happens. That was kind of funny. And guys, that's a big thing about what we do. It's very easy to form opinions, right? Yeah, Gary, that was a great discussion. He and I had the same one. Because you know what I did this morning on a trade? I fought those triggers and got in early and lost, and then had to take that epiphany moment where I was like, oh my gosh. Get it together, Novak. You made a mistake. Guys, remember, there's a difference between what may happen and what has happened. And we trade what has happened. I have gotten odds favorable momentum. I have gotten no termination conditions. And I very much have an area inside of favorable large triggers. Because that's where the advantages lay, guys. Advantages don't produce themselves from opinion. Gary, great read. Wait for those large to roll, right? Wait for the advantages. Give yourself the best chance of success. Carl, when I see this reversal bar with the next arrow bar, is there a percentage for it to go in the direction of the arrow? Carl, are you with me in here? Cool. I'm going to give you two answers, Carl. The first one is that I don't have any percentages. I don't have any idea. But I can tell you that these signals, pay attention to them when your rules are true. Because over here, the triggers are down. The trend is down. We're below all the areas. I'd be more inclined to believe this signal that goes with everything, Carl, than this signal that's fighting. Does that make sense? So when you talk about that market flow, and guys, market flow is the next step, right? And Carl's been with us a while and he's getting good. It's so important that you remember that those signals are only important when your rules are met. Those signals are really a confirmation when the conditions are ideal, and they're not ideal for a long yet. There's no termination conditions. The smalls haven't even gotten to the other side of the large. So I don't pay any mind to this right here. This may be an indication that that change is coming, but certainly not a trade yet. Does that make sense? Good question. Awesome. Let's see where we're at. Guys, great job posting pictures today. Keep them coming. Remember that just because Carl posts a picture, everybody gets to learn from it. Just because Paul posts a picture, everybody gets to learn from it. Gary's bringing out knowledge for all of us, right? Every time you post a picture, it's not just for you. The whole class gets it. Paul, you said this is a good bottom. Termination condition hasn't quite created the full reversal, right? 13.2 hadn't rolled yet, and you said, man, it sure is pretty in the moment. But that's not the trade yet. Great restraint, Paul. Good job waiting for the rules to be met. Divergence typically takes out the pivot. Great read. When it takes out that pivot, you get in at the pivot stop out, Paul. What a great job. Quick profits. There's that picture you sent yesterday though, right? Look at the space. And your trigger lines don't match up on your charts, do they? You got two separate looks there. It's a good read though. Guys, that's chart reading. Gary, same thing, taking it from the mid-band inside of favorable large triggers. You get in, second divergence, you manage out without a loss. Great job, Gary. Same trade. Good read, guys. Remember, everybody's in a different place too. It's important that you guys remember that. Gary is where Gary is. You're not where Gary is. Same one, Gary, nice job. Carl, guys, you're not where John Novak is. You're not where these experienced traders are. Trend trade long. Am I looking at it? Carl, great trade. Perfect entry. Stop placement's wonderful. Out at the first trouble spot. Pivot stop out. You take the exit. Nice job, Carl. Remember to be you, guys. Be where you are and embrace where you're at. Because if you try to take trades that are supported by 20 years of chart reading, well, you don't have it yet, right? New trader, we saw this one earlier, I believe. Thank you for reposting that. All right, D, let's see what you got. D, you got in at 75.83 with favorable momentum, with the first trigger at 75.85. Unfortunately, the trade stopped prior to hitting the first fib line, and you lost money. What should you have done different? What a great question. All right, D, are you ready? All right, I'm going to scroll down so I can see your answers. We're going to have a conversation real quick. D, do you recall? Let me open this up. So guys, one of the most powerful tools that you can use is write your rules on the chart, right? D, why did you get into that trade? What made you pull the trigger? So you said, and I'm going to go back to yours. Okay. So you said you had odds favorable momentum, right? I like it. I love odds favorable momentum, D. You got in at 75. You got in right here, right? Right where the small triggers hadn't broken through support yet. So, D, what did you trade into? Termination condition, right? So you broke rule number 2. So there's one idea why that one didn't work out. D, you also didn't wait for a pullback to an area inside of favorable large triggers. Which means what? It means you broke rule 3. And Chris T, at that point, the small triggers probably hadn't even gone through yet. So D, one of the great things that you can do is awesome job recognizing odds favorable momentum. Awesome job recognizing trading with the trend. Well, actually, you were impatient. Yeah, there wasn't a trade to be had yet. There wasn't a rules-based trade yet, D. And the one thing that if you go through and you start doing this drill right here, D, start embracing that pullback. Because if you get in here Where's your stop got to be? Doesn't your stop have to be above the window of opportunity? All the way up there? So the pullback begins, D, with a reversal bar, with an up bar after all of these down bars. So when everything's going down, this up bar signals the beginning of a pullback. This up bar begins the beginning of a pullback. And then what we're looking for, D, is that area inside of those favorable large triggers. So what you did is you just kind of hopped in on the way down, but you didn't have a clear path. Does that make sense? You had the advantage of momentum, but you didn't have the advantage of a clear path, and you also didn't have the advantage of entering where the market was likely to continue. But what you did do is get stopped out right in an area of resistance inside of favorable large triggers. And D, it's going to take a little bit. You're going to go through and you're going to take these trades, and we'll talk about every one of them. But if you get in the habit of writing all 3 rules on your chart, guys, here it is, right here. This is a high probability trend trade checklist. Let me put it in the room for you. If you get in the habit of writing these rules on your chart every time you take a trade, you're going to start to recognize the advantages that you have, and you're also going to recognize the advantages that you potentially give away. Does that make sense, D? Great post. And guys, what you're going to find is that it's your losers that are the best lessons. Don't hide those from me. And D, the best part is right here. Make all the mistakes. Take every trade that you think you see, right? Every time you think the rules are met, every time you think you have the advantages, take the trade. Post it in the room. We'll talk about it. And what we're going to do is we're going to start going from this entry to this entry. And then we're going to start getting rid of these termination conditions. You're going to end up right where you want to be. It's just going to take a minute. It's a process. It's okay. You want to be an expert in the first week. You want to be a brain surgeon while you're sitting in high school biology. That's normal. Everybody does that. I've done it. I guarantee everybody in this room has done that. Everybody wants to be at the finish line before they lace up for the race. Gary, smalls above the large are wide, divergence prints on a 50-50. And it went too quick for you to get an entry with confirmation. That's good. I like it. Nice job. And then we get that second divergence on a 50-50. It's lower. And you're saying that your entry was 75, 76-ish. Absolutely. And then the conditions begin to change. Great chart reading, Gary. And you guys know this one deserves a look, right? So the puppy's smiling because the puppy's following rules, is beginning to understand the advantages of momentum. Just kidding. Cute picture, though. All right, Safia, let's take a look. $50-50 trade. Woo. Once again, your entry is not in an area inside of favorable large triggers, right? All right, Safia, you're starting to break rules on me a little bit. You want it now, Ron. What's your area inside of favorable large triggers? A pivot stop out, a divergence high isn't an area. So Safia, remember that we're taking trades from 3 areas. We're taking them from fibs, mid bands, 1-to-1s. Don't you dare be sorry. It's okay. Make all of these mistakes now, Safia. And then the other part, I want you to see this right here. And let's do a comparison. And guys, this is for everybody. because this is a good lesson for us. I want you to look at the trigger lines. One is down, right? And one is up. When we go through and we look at favorable large triggers, Safi, remember we want them one on top of the other, right? You want them both going the same direction for sure. So if you take just a second and you kind of look at where you were, you didn't get in an area, and you've got conflicting views on your trigger lines, don't you? And that's okay, because what you're doing right now is you're starting to read your charts. And you're saying, well, everything says down, and I've got momentum, and it's iffy on that whether or not that's broken. You went short. I'm okay with that one, right? But what's happening is you're getting outside of that best of the best. So you're getting outside of that high probability, but you're winning, right? And what happens is you're creating a false sense of security right now. It's Murphy's Law. It becomes pretty easy to win on simulator. Right. And let's go through. Odds favorable momentum, yes. Termination conditions. And Safia, do you see how you marked yes? And I'm not trying to beat you up, and I'm going to stop after this right here. But do you see how you marked yes when the answer was no? And guys, that's one of the great things is you start to develop the opportunity to police yourself a little bit. Great job. All right, Ziba, you said you wanted to enter the market. All right, Ziba, do me a favor. When you, there we go. Make sure you don't add a word to the back of it. Oh, you fixed it. You wanted to enter the market where the box is, but you, okay, I know what you did. Are you ready? Because my wife did the same thing. Ziba, are you with me? So you're saying you wanted to get in down here, right? But it keeps putting you in up here. Are you hitting buy market? Yep. So watch this, Ziba. I want you to right click. Whoops. I want you to right click on the screen near where you want to get in. See where it says buy limit? Now you're waiting for the market to come to you. That's funny. When my wife was beginning to learn the software, she did the same thing. She's like, well, there's my reversal bar. Okay, I'm going to get my buy order ready. And it would look just like that. And I'm like, how come you're not waiting for the pullbacks? She's like, I don't know. It just put me in. So remember, we're going to right click and buy those limit orders. Does that help? Remember, guys, I think I've seen every mistake that can be made. It gets pretty easy to help you guys fix them. All you got to do is ask. Thank you for asking, Ziba. Let's see where we're at. Paul, you say you think when the gap between the triggers like that, you don't look for as big as targets, manage tight. Yeah. I like that you're studying a pattern. 50-50 look, just barely. Divergence prints. Areas are at the very, very top. It pulls all the way to resistance. And then market flow signal. Gary, without a 21 chart, remember, if the 21 didn't have odds favorable momentum, Gary, that signal doesn't mean anything, right? So CJ, buy limit means that I want the market to come down to me, right? Buy stop means that if this market comes down and then comes back up, it's going to get me into the trade. So what I'm saying is that if price returns to 4,475 and hits this, I want to get in. And if you right click, the limit order means I want the market to come to me. I want the market to come down. This is the price where I want to enter. This is the area that I want to enter. Right? Does that help, CJ? Cool. Ziba, it's because you're using TechSmith Capture. I use Snagit. They're the same company. Snagit has all the bells and whistles. Capture's pretty basic, right? But Ziba, when you take that picture on Capture, you still have the ability to write. Right up top here, you have arrows, you have shapes, and you have the ability to go ahead and type on that chart and tell me everything that's on your mind. So rather than being able to just copy and paste, are you sure? Make sure that your color is black and you're not typing white. That would be the first thing that I look at. Because it would be odd. Do your arrows work? Shapes, highlights. Everything works but the call out. So when you do the call out, left click and create the box. Drag it down and then release. And then you'll see the little cursor thing in there. Sometimes you have to double click in there to get it. And then you can start typing. Give it a try. See if it works. Termination condition, right? Price reached an area. Absolutely none of the trigger lines broke through. For all my new students developing trust, that said don't go long, didn't it? All right, Ziba, get with tech. Because I can't see your screen. I'm sorry. Without being able to see your screen, it becomes very difficult for me to troubleshoot things like this. You can try closing it and opening it back up, or get with Jason, see if he can help. Guys, does everyone see price reached 1-to-1s? None of my trigger lines broke through. This is a termination condition. This is an area that may reverse the market. Sure enough, it did. Didn't need divergence, didn't need anything. Guys, that rule number 2 not being met should have kept all of you from trying to go long at that area. If it didn't, then you broke rule number 2. And if you're wondering why, well, you gave away the advantage of a clear path, right? So Suhas, what's the difference between the dotted lines and the solid lines? I'm going to give you a fish, and I'm also going to teach you to fish. So this first section is going to be all of your indicators, right? This is going to be all of your indicators coming through, what they are, what you're looking at. But Suhas, when we're talking about trigger lines, there's the solid lines. These are your small triggers. These are the faster moving. These are your large trigger lines. These are a little slower. And these two work together to establish momentum. Are you with me in here? So when these small trigger lines break above the large trigger lines, it paints the background green, lets us know that we're in an uptrend. Essentially, green means up and red means down. That's the easiest way to think about it. When the small trigger lines break below the large trigger lines, the background paints red. We're in a downtrend. These are moving averages is what they are. We call them trigger lines. So your small triggers work with the large triggers to let us know when the momentum is in our favor. That's all it is. So there's a lot of color coding that helps you out. When the background on your 13.2 is green, we're in an uptrend. When it's red, we're in a downtrend. When you're looking at your indicators and price is below Fibonacci areas, those areas are red, they act as resistance. When they're blue, they act as support. So we piece all of our stuff together. All right, Suhas. These are your areas. And I'm going to make a suggestion. Hang out in class for the day. Listen, soak it in. Have you gone through this introduction? Have you gone through the indicators? Just talking about what we're looking at? Because a little time on this page is going to make everything a lot easier. If you're not sure what you're looking at just yet, awesome. So that picture that I just posted, these are the areas that you're going to look at when you're looking at the market. So I kind of created just a little map for you so that you can go back and reference so you know what you're talking about, whether it's resistance or support. That'll help you just with identification. What am I looking at? Sorry, I'm bouncing here. Trying to find my areas picture. There it is. So these are, anytime you open your software, you're looking at red resistance or blue support. Fibonacci is a mathematician from Italy. The golden sequence, all that. But we use it to create areas of support and resistance. John Novak has created an algorithm that automates the process of taking millions of calculations and turning them into these amazing areas of support and resistance. And then we'll use these trigger lines to determine momentum on whether or not that area is likely to hold or likely to break. And that's what we do in the class. We just teach it all day long. Recognizing the advantages and looking at it. And then just practicing rules-based trades. Paul, everything through, getting ready to go. Everything through. Still outside. I made that too big, didn't I? Still outside. You bet this keeps going. Pass the target to the next one. Not your money if it does, right? You got in, you made your money, you got out. And you're saying that's where the market's likely to go. If it breaks, whatever. I love that attitude, Paul. I'm going to take my money. I'm going to make my money. NG, we got a partial there, didn't we? Let me get the big picture here. So for those of you that are new, for example, Suhas, we're going to do this every day. We're just going to keep talking about these advantages that are present, and we're going to talk about all these different things. And you're absolutely right. Everything hit the 1-to-1 well below. NG time, you're fighting momentum, right? You're fighting direction, you're fighting momentum, you're fighting direction, you're fighting momentum, you're fighting direction. You're hoping that market turns from a termination condition. I'm glad it worked out for you. But we've all read the book, right? How to Commit Financial Suicide in One Easy Step. Trade against strong triggers. Trade into termination conditions. You dodged a bullet. It's a good read on termination conditions. It's a little aggressive on an entry. And then here's an example of how to take advantage of it, right? Termination condition. Let the smalls get below the large. Take that quick little pullback for momentum. And then you're not fighting so much. Claire, great picture. One is aggressive and hoping. The other one has some pretty clear advantages. Nice trade, Claire. Great patience. And that way, NG, if it does break, well, you're not getting run over, right? Ron says momentum, clear the areas, jump in, make money, get out. I love it. Ron, great plan, great trade. Gary, everything says down, small's outside of the large. Area likely to stop the market was an absolutely perfect entry, right? You overthought it. You just overthought it. Suhas, I'm not sure what a put is. Help me out. A sell? And Suhas, I hate to admit this to everybody, but I'm familiar with Nexgen. But I'm going to tell you what. You, my friend, are an amazing student. Are you ready? Rule number 1 says that we should have strong trigger lines. Small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. Rule number 2 says that we shouldn't reach that key area yet. We have to have the advantage of a clear path. So, Suhas, on your first day, you recognize rule number 1 being met. You recognize rule number 2 being met. Rule number 3 says wait for a pullback to an area of resistance inside of those favorable large triggers. Your rules-based entry was right here at 39.94.75, Suhas. What a great read. Absolutely, I got rule number 3. Sure. So when we talk about rule number 3, we'll just zoom in on your 5-1 chart. Rule number 3 says that we're going to wait for a pullback, and a pullback means that the market's going against the trend, right? Your large chart said we're going down with momentum. Your large chart said that we hadn't reached an area yet, which means that we have a clear path. So on your small chart, you're going to identify the large trigger lines. There's the top of them, and there's the bottom of them. Do you see that so far? Here's your large triggers working their way down. Whoops. And then here's your highest point of resistance and your lowest point of resistance, the mid-band. That's the area where the market is likely to continue. We're going to buy or sell a pullback to an area, fib, mid-band, 1-to-1. Those are your areas. Going to buy or sell a pullback in an area inside of large triggers. All right, new trader, if you ever reach the max user, and this is what Claire does every morning, she reminds me. Watch it on YouTube. It's a great video, or it's a great picture, great sound. Everything's exactly like it was. And then just you can post in the room. So it still works 100% the way it's supposed to work. You're just not going to see it on the Discord. You'll be able to look at it on YouTube. And absolutely, Jose, it was a 50-50 trade. What does Jose mean it was a 50-50 trade? It means that the smalls are through the divergence low, the large are not. It becomes a medium probability trade. But the process for finding the entry, take care, Bobby T. The process for finding entry is the same. A pullback to an area of resistance inside of favorable large triggers. Nice job on that picture. So get in the habit. Write those rules on a picture every time you take it. Jason, let's see what you did. Came from a good bottom. Triggers are wide. Pull back to support inside of favorable large triggers. Jason, nice trade. Not a full roll just yet, but you had way more advantages. Guys, remember, if a market's going to roll, if it's going to turn, if this bottom's going to hold, these triggers are going to roll first. Nice trade, Jason. Suhas, did that help on rule number 3? I hope. I would identify it, Jason. I would recognize it. Absolutely. It's a potential termination condition, right? But it's your time of entry. You had a good bottom. You had a reversal. You had strong small. You had a full trigger roll letting you know that the bottom was probably going to be good. You took a rock star entry with virtually no risk. When you get back to that trouble spot, you took profits. Could have gone break even. And you just held on with momentum. I think it's a beautiful trade. Very well executed. All right, Paul, let's see what you did. Anything can happen, triggers. 2 divergences, small inside. You take the first entry at the best spot, you get paid. And now you're back to waiting because the conditions have changed. Paul, great trading. Killing it today, my friend. All right, Safia, much better. 50-50. Look at that entry right at resistance inside of favorable large triggers. Great job, Safia. Nice recovery. Now we got yeses all the way through. And guys, this is what we do, right? Make a mistake, have a talk, fix the mistake. And then you're going to do fine for another week. And then you're going to make a mistake. We're going to have a talk. Oh, you're doing great. I got no worries about you. Paul, you just hit your assessment target. Nice job. Congratulations on that. Sam, let's see what you're doing. Perfect entry. Beautiful look. Perfect exit at the trouble spot. Third divergence prints. Get out of that trade. 3 divergences in the same location. Sam, nice work. Dab chain. In below the area. 2 divergences print. You're in at the area. If that third divergence prints, things may not work out so well. Losing momentum a little bit here. We'll see where it wants to go. That's a big stop. Nice, Gary. Where at, Indu? Are we talking about this one? All right, so let's look at it. Indu, when I talk about entries, and guys, it's important that you understand this. When I'm talking about entries to this class, what's our first 30 days focused on? Do you guys remember for 30 days, what are we focusing on? We're focusing on entries. We're focusing on getting in at the correct spot. Why? Because it makes trades manageable. So Indu, sometimes you're going to hear me say, that was the perfect entry. Why was it the perfect entry? Because it was the area of resistance inside of favorable large triggers, right? So it was the perfect entry spot. It was a great identification of the window of opportunity and a great identification of where the market is most likely to continue. Guys, if this is your only focus for the first 30 days, everything remains pretty simple. So Indu, he's getting praise for where he entered the market, right? Well, he has a 50-50, Dave B. He has smalls below the large. The large are wide. They're angled in the direction of the trend. The smalls are through the area, but the large are not, right? So there's Ziba. I will talk about everything. Got you. So guys, do you recognize this is an area with the potential to break, but it hasn't broken? Give me a Y in the room if you're with me. Because a lot of you guys are looking for reasons not to take trades. It has the potential, but it hasn't broken me. Ziba, it means that you're doing nothing. It means you're not in a trade. So if I'm flat, I'm neither long nor short. I'm not in a position. So guys, let's look at this. If this is an area with the potential to break because of the momentum, because of the great top, he's had 2 slowdowns, right? 2 losses of momentum. Indu, this is what you're focused on. Well, there was divergence. I can't take this trade. Well, if your plan says don't take it with divergence, then you're absolutely right. Stick to your plan. But as you grow with the software, guys, as you become better and better at reading the information that the software gives you, that the indicators are telling you, I want you to see something. Let's start talking this through. Dave B., Indu, where are the small triggers in relationship to the large? They're strong, right? I still have odds favorable momentum on that smaller, faster chart. I also have synthetics and large, one on top of the other. And guys, I've got a window of opportunity that's one line wide. So you're going to have to ask yourself, with this look, with this momentum, with everything going, with strong charts, with a tiny window, are you willing to risk a few ticks to get to the next area? Understanding that it's a 50-50, right? Understanding that it has the potential to not break. And check it out. That third divergence lets you know that it has less chance to break. So guys, medium probability trades, you can still take them, but you have to be willing to manage them assertively. The one thing that Sam could have done is when this divergence was true, maybe get out a couple ticks better. But he took quick profits at the trouble spot. Third divergence prints, smalls inside, he exits the trade. Perfect execution on a medium probability trade. Does that make sense, y'all? And then dab, same thing. That third divergence prints, you take an exit, nice job. Great chart reading. It's all about chart reading, guys. You're a chart reader, you're not a trader. Remember that. Ziba, buy the market right now. That's all that means. If I click this button, it's going to get me in a long position. Sell the market right now without hesitation. If I push that button, it's going to put me in a short position. You're welcome, Indu. Buy ask, sell ask. I have no idea. I've never used those buttons in my life. Buy bid, sell bid. I have no idea. I've never used those buttons in my life. Reverse. I would never do that because I've got a plan that says I know exactly which direction I should be going. Close, it means that I want to get out of this position, but my targets, my stop haven't been hit, and I want to exit right now, so I hit close. So really what you're going to use more than anything, Ziba, is going to be the limit order. And that's where you right-click on your chart. As you grow with the software, you may use buy market, you may use sell market a little later on in life. But right now, Ziba, we are entering the market using a limit order at an area inside of favorable large triggers, which means that 99 out of 100 times, you're going to right-click and you're going to hit buy limit. Does that make sense? Remember, just because it has the bells and whistles doesn't mean that you need them. Doesn't mean that you're going to use them. I still haven't figured out everything in my new car, and I'm driving just fine. So there's a lot of different styles of trading that may use buy ask, that may use sell ask, but full disclosure, I have no idea what those do. But if you have to know what those do, watch this. Come to NinjaTrader and click Help. And from Help, look at all of these NinjaTrader ask. Let's see. Buy ask. And there's all the different opportunities to learn about it. There you go. So Ziba, submitting orders from the help section. There's a video. And all sorts of great stuff. Guys, take advantage of the resources. Take advantage of those resources. I'll give you the answers if I know. If not, I'll try to point you in the right direction. New trader. Rules 1 and 2 pass. Smalls are through, large are not. Odds favorable. Here's a pullback to an area of support inside of favorable large triggers. Here's a fib right there at large triggers. Exit point at the fib. New trader, I like it. I like it. New trader, one thing that you're going to notice on this picture though, do you see how the synthetics and the large are split? They're not trading one on top of the other. This becomes a little hairy because it widens that window. It widens those possibilities. When they're trending one on top of the other, it's always a better look. Just a little heads up. What color are you talking about, Suhas? There's a lot of different colors there, and they're consistent for the triggers. Triggers going up are green, triggers going down are red. When price trades above a midband, the midband is green and typically acts as support. When price trades below a midband, that midband is magenta, typically acts as resistance. Blue is support, red is resistance. So it goes back to, once again, where's that areas picture? I want you to save this one. I want you to look at it. It describes what's happening. Green is up, red is down, blue is support, red is resistance, magenta is a midband that's down. Magenta is a divergence high, cyan is a divergence low. Dab chain. That was the whole trade. Nice job. Momentum said take it. Loss of momentum said exit it. Nope. You have a clear path. You have odds favorable momentum. You have an area inside of favorable large triggers. I love a dab chain. Momentum and a clear path makes a difference, doesn't it? Sell limit, Ziba. It hasn't changed. To enter the market, right click, buy limit. That's it. We enter on a limit order, right? We enter on a limit order. Ron, good job. Take care. 71. You are more than double my temperature here. Ziba, do you see it? We're only going to enter on limit orders. That's it. We talked about what a stop limit was, but we don't need stop limits. Right click, exactly. At the area you want to enter at, Dan. So if my rules say that I'm waiting for this midband inside of favorable large triggers, I'm going to right click and I'm going to buy limit just above that mid band. Ziba, stops get you out of a trade. Stop means that you've reached an area where you no longer want to be in that trade. All right. Here you go, Ziba. This is for you. I want you to watch this video real quick. It's 2.5 minutes. And this is going to answer a lot of your questions. Just give you a little rundown. This is straight from NinjaTrader to help you understand. Absolutely. But we enter on limit orders, right? And then let's say, don't go anywhere yet, Ziba. Let's say you don't have an ATM strategy in, right? And I sell the market. Whoops. I have to go none. Or let's say I get in early, right? And I buy the market. And I'm not going to hit buy market because I get in on limit orders. But this is just a lesson. And I don't have any stops. And I don't have any targets. So Ziba, I bought the market, right? Which means that I expect the market to go up. If I need to create a target, well then I need to sell, right? Because that's the opposite of buy. So now I've created a target. And then if I want to get out of the trade and I need to create a stop, well then I'll sell stop 2. So now what I've done is I've said if the market comes down here, I'm going to get out. If it goes up here, my target is reached. The one thing that you have to do is if your target is reached or your stop is reached, you have to cancel out the other side. So if you forget to put in those stops and targets, remember that you need to do the opposite. If a buy got you into the market, you need to sell to get out of the market. And if you sold to get into the market, well, then you need to buy to get out of the market. So it's kind of this cool little process, right? 26 degrees, Justin. That looks cold. That looks very cold. Can I ask where you are in the world? Utah? You guys get the best snow there. I've got a buddy in Minnesota bracing for the big snowstorm coming in up there. He said it was about 10 degrees last night. Ziba, did that help a little bit? Nice. I miss snowboarding. I lived in Colorado for a year. That's all I did. Nice hot weather in India? I bet. No worries. So Ziba, can you identify the window of opportunity? Let's go back here. Let's find one where we have a good window. Bengaluru. After the tiger? Oh, nice. All right, Ziba. We're going to get you. I promise. You're stuck with me. All right, guys, let's do a bar by bar real quick. And this is for you new users. This is going to help you a lot. Are rules 1 and 2 met on the 13.2, guys? Do we have odds favorable momentum? Do we have no termination conditions? Everything says down and there's nothing in the way, right? Rules 1 and 2 are met. You guys are good at this one. This is the easy one, right? There's no lines, and I have odds favorable momentum. Well, now I have to watch my 5-1 chart. And on the 5-1 chart, I'm looking, and my trigger lines are starting to turn, right? and all of these down bars. Guys, what are we waiting for on the 5-1 chart so that we can pick a window of opportunity? Everything says down, but we're going to buy a pullback. And what's a pullback look like? It looks like that, right? Perfect, D. And D, this is the one that you skipped on yours earlier. We have to wait for that reversal bar. And then Just Incredible showing off a little bit here. Let's create our window of opportunity. So the first thing I'm going to do is I'm going to draw a box from the highest point of the trigger lines to the lowest point of the trigger lines. Is everybody comfortable with that? All I'm looking for right now is where are my trigger lines? I don't care about getting in. I don't care about areas. I don't care about anything other than recognizing the top to the bottom. Are we good? So let's write it out one more time. Well, D, they're different charts, aren't they? They're different time frames. How could they possibly be the same? The one-to-ones are going to be different. The divergences are going to be different. And D, remember, and I love that you posted that. The 13.2 is the general temperature, right? The 13.2 lets me know that I have odds favorable momentum. Excuse me. The 13.2 lets me know that I have no termination conditions. This is a broad stroke of the brush. We're looking at one bar. The 5-1 lets me refine it. It's a completely different time frame. And what happens, do I still have that picture? What happens in one bar on the 13.2D happens in multiple bars on the 5-1. This one right here, or the 13, yeah, I'll give them all to you. There's the one that shows how the relationship between one bar and many bars. Here's the one that reminds you which charts we're using, right? Guys, this is all part of the process. You're going to forget as much as you remember initially, but eventually it's all going to come together. Odds favorable, no termination conditions. And guys, look at this. Here's the reversal bar, signals the beginning of a pullback. We've identified, and CJ, I wanted to answer this one. Sometimes it might be the bottom of the large triggers and the top of the synthetics. I don't care whether it's synthetic or large. What I want is I want them working together, right? I want them one on top of the other. Doesn't matter which is lower, which is higher. All I'm looking for is them to be close so that I can create my window. And remember, for a short trade, nope, I'm not worried about the small triggers right now. The only thing I'm worried about is my lowest point of resistance to my highest point of resistance. And guys, there's only one line, only one area inside that, isn't there? Remember that we'll take a trade from a fib, a midband, or a one-to-one, or any combination. Give me a Y in the room if you see it. The only area inside a favorable large triggers is a midband. So Ziba, this is where you're going to right-click. And this is saying buy because the market's trading someplace else. Ziba, this is where you're going to right-click and you're going to activate your limit order. Sell limit. Because we're going down, we're going to sell, right? Because we know where it's likely to continue, we can use a limit order and let it come to us. I'm going to right-click and I'm going to sell limit right at the bottom, a tick or two below that midband. Are you with me, Ziba? You have two choices for entry on a high probability trend trade. You're going to buy limit at the area for longs, or you're going to sell limit at the area for shorts. So sell limit, right? And Ziba, this is all you have to do. Right-click, sell limit, then put your hands in the air. Get your hands 3 feet away from the mouse because you've done everything that you can do. You've identified momentum. You've identified no termination conditions. You've identified where the market is likely to continue. And then it's up to the market. The market's either going to come back. Oh, it didn't get us, did it? Son of a gun. We're not in a trade. The mid-band came down a little bit. I'll lower my entry. But do you see how it didn't hit your limit order, guys? You're not in a trade yet. Right now you're thinking, oh my gosh, this is horrible. The market's going without me, because you haven't built confidence in the methodology. And a lot of you jumped in right here and said, oh, here I go. Safia, this was your trade that you sent me yesterday, right? It didn't make that best of the best area. Guys, we don't chase. Just below the area. And there you go. You still have odds favorable momentum. You still have no termination conditions. You still have strong triggers. You still have a small window of opportunity. Guys, the rules are still met. Absolutely. Safia, I like to be a tick or two below my area of resistance for a short and a tick or two above for longs. Why? Because I've got odds favorable momentum, right? So I'm not expecting a huge pullback. It could happen, but I'm expecting a shorter one. Ziba, does that make sense? Advantage is present, area inside, and just wait. Right click, just wait for it. And guys, there's your trade. Odds favorable, no termination conditions. Do I have an area of support inside of trigger lines trending one on top of the other? Not so much, right? So let's go look at the other chart. Let's look at crude oil. There's one of Claire's continuation trades. All right, let's look at this one together, guys. Let's see what this looked like. I'm going to give it a circle. Not the prettiest look, is it? Now the areas are beyond, right? It's just not right. But if you took it from here, if you took that first reversal bar, but it's kind of already at the area, not the best look. Guys, sometimes you just got to realize that it's not your trade. That it doesn't have the advantages that you need to be comfortable to enter the market. And your comfort levels come from repetition, from practice, right? Here's a good example. It didn't make it, did it? So Ziba, your order for entry might have been all the way down here at the area inside of favorable large triggers, right? You right-clicked, you put that order in, and it didn't come. It didn't get you. So you just have to click that red X and cancel. My rules weren't met, therefore I'm not in the trade. Does that make sense, guys? Ziba, does that help a little bit? I think you're overthinking a little bit, and we all do in the beginning because we're like, oh, there's so much to do, but there really isn't. For your first 30 days, I want you to focus on momentum. For your first 30 days, I want you to focus on the entry inside of favorable large triggers, and don't worry about anything else. Nope. Safia, are you guys ready? I've probably never said that. There's only two things that can happen. Rules met or rules not met. Yeah, absolutely. I'm not going to dictate how many trades I should take, because what if the rules are met perfectly 50 times in a day? If I tell myself that I should only take 5 trades, should I really miss 45 of them? So focus on rules met, rules not met. Awesome, Zeba. I'm telling you, every day you're going to get a little bit closer. And what's amazing is that if you really get that mentality, if you really embrace that mentality, the only way I'm getting into a trade is my rules are met. If your rules have been proven to win more than they lose, well, then you're in a great position, right? Whether it's one trade, and there will be days where you may have one trade. There might be days where you have no trades. But we do that. And guys, if you go through a day and you're like, holy crap, I didn't have one trade, go back and do this circle drill and see if you missed an opportunity. I'm going to leave you guys with the S&P real quick. Let's see what happens. Guys, price reached support. Absolutely none of the trigger lines have broken through. Are there any short trades to be had into a termination condition? Do I have odds favorable momentum up? Do I have odds? No. So you guys are telling me that the rules aren't met for up or down? All right, sounds like a great time for me to take a break. I'm going to go fill up my water, guys. I'll be back in a minute. When I come back, I want you to ask any questions that you have, guys. And we're going to talk about, a lot of you are saying, well, gosh, I should go long, right, Mark? I'm in a termination condition. This area is likely to stop the market. There's a difference between an area that may hold and an area that has held. And I'm going to bring that picture to you in just a second. Guys, I'll be right back. All right, y'all. Home stretch. Sam, I like using the markets as well because patterns repeat themselves all the time, guys, and it's easy to go back and look at pictures, but when you watch it happen live, I think it helps breed that confidence a little bit, and that's one of the reasons why simulator is one of the most powerful tools that you guys can use. Getting in. Has anyone ever played Monopoly? I feel like you have, right? Anyone ever lost thousands and thousands of dollars in Monopoly and had anxiety or felt like their world was over? I hope not, because it's play money, right? You're like, this is a fictitious kind of scenario. This is a no risk. This is where I can hone my real estate skills. Guys, that's what simulator is for. Simulator is for you to get to a point to where you can take these trades over and over to develop muscle memory. So that you can do this and understand the advantages, the disadvantages. You can go through the anxiety, the heartache, the turmoil, all the things that you're going to probably experience, but you can do it without financial risk. And the path to get to where you want to be, guys, revolves around simulator. Posting those trades in class, making sure that every time you pull the trigger, right or wrong, especially wrong, that you post in class. If you think you see a trade, post in class. If you take a trade and you think that it should have won, well, then you're creating unrealistic expectations, right? We don't know if we're ever going to win or lose. All we can do is follow our rules because our rules provide a set of advantages that typically win more than they lose. So you've got to learn the rules for when it's okay to trade, guys. That's your entries. You've got to learn to identify strong trigger lines. You've got to learn to identify no termination conditions, and you've got to work diligently to begin to identify that window of opportunity. And if you're not sure about the window, well, then you need to go back and take pictures and say, hey, Mark, here's 5 pictures of windows of opportunities. Am I seeing this right? I'm looking for areas inside of triggers, and maybe all 5 are perfect, and maybe only 3 are perfect, but we're going to have a conversation about them all. Simulate daily, keep posting in class, and guys, don't practice the wrong trades. Don't create this false sense of security, taking the wrong trades, breaking the rules, deviating from the plan that typically creates winners, because you're creating muscle memory for long-term failure. Simplify your plan. Keep it easy, guys. Keep it simple. Let yourself be new. Take advantage of market replay. Go back and replay the day. If you miss trades, go back and take trades. If you're working on your management, go through and practice management. If you took the wrong trades, skip them this time. Don't take them because the rules aren't met. Take pictures when you market replay. Guys, take pictures of the day, take pictures of market replay, compare the two. Am I correcting this? Am I fixing the patterns that are costing me money? And you're going to repeat this process every day until you always take the correct trades. What does that mean? That means that if you take 10 trades today, 10 times, you should be able to look at this checklist and say, absolutely, 10 times today I took the correct trade. Guys, if you took the correct trade 10 times, and that's a small sample, well, there's a good chance you probably won 7 of them, right? And what does that mean? That means that you probably lost 3 of them. And when you took that trade and you lost it, you might have said to yourself, man, what did I do wrong? Why didn't that work? I had odds favorable momentum. I had absolutely no termination conditions. And man, I had the best entry inside of favorable large triggers than I could have ever had. And this one lost, right? I don't know, D. That's just an arbitrary number that you made up. There might be 2, there might be 20. Every day is different, right? What's happening today in the market? Today, there's a big FOMC announcement at 2 p.m. Eastern. So at 2 p.m. Eastern, some guy in a suit is going to talk about interest rates and what went on in their meeting. Maybe today everybody's jockeying for position. Maybe things aren't working out the way they're supposed to. Maybe we're hitting fibs. Maybe there aren't a lot of opportunities. But maybe tomorrow there's 50 of them. The key is to go through, and every time your rules are met, trust the process enough to take the trade. Whether there's 1D or whether there's 100, every time the rules are met, trust the process enough to take the trade. Guys, this is a rules met loser. This is a cost of doing business, right? Joel F., here's one of yours. There's odds favorable momentum without termination conditions and a pullback to resistance inside of favorable large triggers. 70 to 80% of the time, Joel. That's a great look, right? This is your trade, Joel. This is from, oh, I don't know when. I can't even read that. That's March 23. So this is relatively recent. Or they might go up, right, Sam? But they certainly move. So Joel, have you taken this picture enough to develop trust? You never know, Sam, exactly. You guys know that when you download the spreadsheet, when it was put on your computer, this is the copy that you get. I'm going to show you. If I click on the link, and you guys all have this, Nexgen Study Picks. Did you know that you have almost 70 pictures of high probability trend trades to study? You have almost 70 examples of picture perfect trade setups that you can go through and study to help develop recognition, right? Joel, you're wondering about that circle routine. You have 70 pictures to look at how they coincide. And then you can go to the live market. This one's into a termination condition. It doesn't count. Guys, FOMC day. Look at what the market's doing. They're trying. There's a lot of indecision. These guys are trying to figure out what the heck they're going to do, right? There's a couple opportunities in there. But Joel, just go through. Let's see if we can find a rules met trade. Odds favorable, no terminations. Everything says up, right? So you're just going to circle it. Smalls broke through. Rules 1 and 2. When rules 1 and 2 were met, circle. That was 2:30 yesterday. Let's go back to it. Did we get a pullback to an area of support inside of favorable large triggers? Looks like a no to me, right? It came close, but not quite, which means that technically rule number 3 wasn't met, that there wasn't an opportunity there. What about this one? What if we reverse engineer, Joel? What if I circle a pullback to an area of resistance inside of favorable large triggers, and I scroll back? What did that circle look like? There it is right there. Rules met on 1 and 2. You can go either way. But guys, the key is to do it, right? The key is to go back and not only circle them and look. Here's the second half of that. You have to take a picture. And when you take the picture, you have to annotate the charts. You have to reinforce those rules, right? I have odds favorable momentum, and write it out. Rule 1 met. I have no termination conditions. Rule 2 met. And then go to your 5-1 and put mid-band inside of favorable large triggers for entry. Rule 3 met. Guys, do you see how not only can I scroll back to get the look, but I can reaffirm the look. Oh, thanks, Safia. We'll do that. But I can validate the rules that they were met. And now I can come back and I can take this picture, and if I save it to screencast, I can pull up my spreadsheet. And now, does everyone agree that that was a perfect short? That that was the perfect entry for a short? So now I can call it rules met short, and now I've got one more example that I can come back and study. Guys, have you filled out your spreadsheet, your personal trade setups? If I asked you to show me a picture of your spreadsheet right now, who could do it? Who could show me perfect entries? Who could show me rules met? Who could show me what they've done and how it ended up? CJ, I fought it tooth and nail in the beginning, and I got exactly what I got out of it. Leaving against your will. Zeba, have an amazing afternoon. Remember to keep it simple. I'll see you tomorrow morning and we'll do it again. Guys, if you're not using the spreadsheet, you're hurting yourself. If you're not taking pictures, you're hurting yourself. If you're not posting in class because you're afraid of what everyone will think about you, these people that don't know you, like look at this guy, K-Dog. He's not worried about it, is he? Sam, you've been doing a great job with it. And have you noticed that your entries look amazing already? There's a correlation. You're doing the homework, you're doing the work, and you're getting the results. All right, Safia, really easy. So Cal, look in your folder, Nexgen Study Picks. It should already be in there. If you can't find that folder, go to the search function and type in Nexgen 90. And that'll bring you to your spreadsheet. When you guys download software, they put a copy of this on there. It's that important. All right, Safia, if I right-click on either my 13.2 or my 5.1, it doesn't matter. I'm going to click on Data Series. And do you see how you can see the buys and the sells on mine? If I scroll down, the last option is Plot Executions. If you scroll all the way down, Plot Executions, and there's three choices. There's Do Not Plot. Watch these over here, guys. That's probably what you have on right now, Safia. You can plot markers only, and that'll show you where you got in. An arrow on the left side of the bar is your entry. An arrow on the right side of the bar is your exit. Or you can do what I like to do, because I like to see the prices so I can do the math. Text and marker, I click apply. And then that's going to show me where I bought. And I know that this was my entry because the arrow's on the right side of the bar, and it shows me where I exited, Safia. So this just kind of gives me that visual of what I'm doing. That's up to you. I like it because I like to see where I'm getting in and out. I like to see the prices, and it lets me do the math in my head real quick. Because if I can see these prices, then I don't have to look over here. So it's up to you. If you want to see where you're getting in, absolutely. You can plot them. If you're not curious, if you don't care, it's your charts. All right, let's see. You have to hit apply to make it happen. You know what, Cal? I don't have Nexgen study picks on my folder anymore. I'm a little bit beyond the demo process. Just like we did yesterday with TechSmith, Cal, I want you to go to the search function. And from the search function, I just want you to type in the number 90 and let me know. Let me know if you can find it. KR, I like it. Honestly, because for me, it lets me know that I'm on the right side of everything, right? I can't have odds favorable momentum. Whoops. I can't have odds favorable momentum without the smalls above the large, which means that the large have to be up, which means that they have to be up strong, which means that they're up strong, right? It's just a verification. I don't know that it creates one more advantage over the other. I love the look. I'm a big fan of it, KR. It's that overall. And you can ask my brother. I am very slow to change. I absolutely hate change. It kills me. And you can see the advantage on the 5-1. And you can, right, Alex? No worries. So, Cal, too much pain? I'm sorry, Joel. I hope you feel better soon. Cal, down at the very bottom of your screen, this is your toolbar. And your toolbar is going to have all the different programs that you can run. So right here, typically next to that window, that Windows thing, is going to be the search. So if you click on that search bar, let's just do this in order. So now if I click on the search bar, oh, it's not going to let me do it. If I click on the search bar, it's going to let me come up here by the magnifying glass. That's my cue that I'm searching. And what we're looking for is Nexgen 90-day worksheet. And then if you open it, well, then you've got that worksheet. The other thing that you can do, Cal, is if you're comfortable downloading things off the internet, is you can just follow this link, and that'll take you straight to the one from the website. But what you have to do with this one is you're going to have to download it, because this is a Google document that belongs to John Novak, and he's not the kind that shares. So you're going to have to go File and Download. And you can download it as Excel. And it's going to come right here and it's going to download. When you click on it, it's going to open up. You'll have to enable editing, and then you'll be able to save it to your workspace. And if I'm not mistaken, if you go to the tutorial section and you go to the trade tracking sheet, this link right here will give you every instruction that you need to download it. And then if you're still having trouble with it on your end, remember that both tech and your salesperson can get in there and they can grab hold of your computer and walk you through this and make sure that you're taken care of. So there's a couple options for you on that one. Gary, let's see what you've been up to. Pivot from nowhere. There's that gap theory, right? Price reaches a mid-band, large triggers remain a full bar away. Keeps you from taking a trade. Gary, You took the short and it didn't work out, right? That's okay. It happens sometimes. Price closes the gap to the triggers, and then you go into a little bit of just a holding pattern, right? It's not a good bottom. We haven't broken the area. Triggers don't agree. Very much a sit on your hands moment, right, Gary? Cal, I know sometimes in the first week, in the first couple days, you're like, man, some of the stuff's a royal pain in the butt. I know it is. But once you get situated, once you get kind of where you need to be, everything really falls into place. There's just a couple little things that have to happen to get you there. Guys, termination condition to the tick, right? Price reaches resistance. Absolutely no trigger lines break through. You're welcome. We know not to take this long trade, don't we? Because we don't have the advantage of a clear path. We know not to try to go short because we don't have the advantage of a clear path. So guys, I want to show you a picture. We're going to talk about the difference as we get into the tail end of this class. Whoops. The difference between an area that's broken and an area that has the potential to break. I even labeled this picture might versus has. Absolutely, new trader. Give me just a minute here. Guys, as price pulls up to resistance, this is an 8-range chart, but it's true on all the charts. Notice how all the trigger lines are up. Notice how everything says the market's going up, even though there's an area of resistance. Very much like what we see here. The market's going up, but we reach that area of resistance. And you can see it right here. And a lot of people say, well, gosh, that's resistance. I'm going to go short. Or holy smokes, that's support. I'm going to go long. And they're going to fight that overall momentum. They're going to fight that momentum working against them. Where on earth did I put that picture? So there's a big difference, guys, and this is the patience that sets traders apart. Waiting for an area to break rather than hoping that an area to breaks. Waiting for the indicators to tell you that the area has held before forming the opinion that the area should hold. If I believe that this red line should hold, I think resistance will hold, well, I get stopped out. So I try it again, and I get stopped out, and I try it again, and I get stopped out, and I get stopped out. Because my opinion is that this area should hold. My indicators say that it hasn't held yet. If an area is really going to hold, guys, whether it's support or resistance, your trigger lines are going to roll. It's a mathematical impossibility for them not to. And this is the thing that a lot of study has brought me to conclude. This price, the opinion that the area may hold, is typically almost the exact same price when the area has held. Guys, this will pull 2 or 3 losers out of your day every day. Waiting for the advantages rather than assuming that they're going to happen. Waiting for the areas to hold. Waiting for your indicators to give you the information rather than forming opinion about what should happen. This area of support should hold is what a lot of people think, right? At 02, they're like, support should hold. All the triggers are up. Everything says up, larger up. 402 is definitely going to hold. And then you get walloped and stopped out. And you don't get a rules-based trade. The one that I just posted, Safia, or the one that we were just looking at, this one, there's nothing to read on this one, Safia. There's no information that's pertinent other than the triggers rolled, which said that this area with the potential to break has held, or the potential to hold has held. It's nothing but trigger lines. That's all that we're looking at. So Down here at 1033, as price comes to this area, Safia, I think it'll hold. I think it'll hold. I think it'll hold. Triggers roll. It's held, and the market goes up. That's all that chart's doing. It just happens to be an 8-range chart. Your 5-1 chart will give you the exact same information. When the market turns, if everything is green going up, well, when everything is red going down, whatever area was up here has held. Everything is green going up, hits resistance, bounces, bounces, bounces. Everything agrees, and the market goes down. That's all that was. It was just a reminder that it doesn't do any good to form an opinion about what you think is going to happen. Life becomes much easier when you let the indicators tell you that it's happened. So new trader, are you comfortable with the process of circling? Are you comfortable with identifying odds favorable circles? Cool. So new trader, I'm going to do 2 things for you here, okay? I'm going to make a trade with you. You want to do a little barter system? I'm going to give you 4 pictures, okay? I'm going to give you 4 pictures that illustrate the window of opportunity. So there's our first one. You know what? Let me make my life a little easier here. Let me get rid of all of those. So new trader, this is only a 5-1 chart, right? From the top of the triggers to the bottom of the triggers, the highest point of support to the lowest point of support for a long trade. All right, our next one is the same thing going the other direction for a short trade. Draw a box. When you're going back and doing your study, new trader, go back and draw a box around the triggers, and then draw a second box at the areas that are inside of them. Draw one box around the triggers. Draw a second box around the areas that are inside of them. It's those areas inside that become your window of opportunity. Trigger lines, areas inside. So these are some great examples just to kind of check yourself as you go through this process to make sure that what you're looking at on the 5-1 is actually what you need to be looking at. And then when you're drawing your window of opportunity to take your pictures, I'm going to find one that just kind of fits the mold a little bit here. So new, let's say that this is your circle, right? And you're trying to define it. I don't know, Sam, are my rules met? Do I have the rules met for a high probability trend trade? Because if I do, then the answer is absolutely I would. But if the rules aren't met, Sam, then the answer is absolutely no, I would not. How easy is that? And Sam, what you just did, and I don't know if you guys noticed this, what you just did is you started to feel left out a little bit. Maybe you didn't for real, but that's typically what it is. When you start saying, should I take a trade, rather than saying, are my rules met? Yeah, you're starting to think, well, shoot, maybe I'm missing something. But Sam, if you go to the most current, right? And let me go through this for new trader real quick, and then Sam, we're going to go through it. New trader, when you take this picture, or when the market is static and you're doing it, take a rectangle from the bottom of the triggers to the top of the triggers, take a circle, and put it around the areas. And do you see how the window of opportunity falls within? So start practicing that, new trader, and what it's going to do is it's going to train your brain to look for areas. It's going to train your brain to look for fibs, mid-bands, and one-to-ones because you know that's where the advantage comes from. All right, are you ready? Sam, watch this. And all Gary is saying, and Gary, he may see a trade. Guys, I may see 1,000 trades. But they have to have rules met. And Sam, this is the process that I go through, right? This is the process that I go through. So the first thing, where am I coming from? Price reaches an area of resistance. Sam, right now your brain is saying, look, it's a good top. There's a full reversal. The smalls are below the large, right? Am I about right where you were thinking? Cool, me too. But then I have to keep going, right? Well, price reach support, and none of my trigger lines broke through that one. So this should be where it stops, right, Sam? This is where I say, okay, no trade. But your brain's going to say, man, but Sam, think about it. If that good top is going to reverse the market and it's going to drop a bajillion points, don't you want to be a part of it? And then, Sam, which of these areas are inside of large triggers, right? When you asked me the question, one was up and one was down, right? Holy smoke, Sam. You can't even get trigger lines to agree. So, Sam, can you tell me which direction the market's likely to go? Can you tell me if it's going to go up from support or if it's going to continue down from resistance? Can you tell me if this divergence is more important than that divergence? Can you tell me if this area that just held is going to hold stronger than this one with divergence? And I love that you asked that question, Sam, because what you did is you just illustrated that we don't have to know what's going to happen next. But if we commit ourselves to trading rules, my rules are met, my rules are not met. It takes a lot of the headaches out. It really does. It really does. And then Gary pulls out his checklist. And I love this. Gary says, you know what? I'm not sure. I think I see a trade. Let me run through my checklist. Do I have a good top? I do. Do I have a termination condition? Oh, wait a minute. I do. Psh, I'm done. He calls it his Bible. So, Sam, I want you to get in the habit of pulling out that checklist every time you think you see a trade. And then you'll know for sure if the rules are met. And if you're not sure, all you got to do is talk about it. Dave B., smalls below the large are wide. They're angled in the direction of the trend. David B., you had odds favorable momentum. You also had absolutely no areas in the way. Dave B., you had a clear path and you had momentum. Guys, does everybody in the room agree with that? Absolutely. Dave, at the time of this pullback, you had a mid-band right there inside of favorable large triggers, didn't you? You had the small still outside of the large, and you had every trigger line below 52. You know what one of my favorite things about this class is when you think you broke a rule, Dave, but you didn't. It's a tick, right? It's one tick. It's an area likely to hold. Dave B., I love this trade. I think I would probably take this trade every time. Every time this trade set up, wild horses couldn't keep me out of this trade. Why? Because it has momentum, because it has a clear path, and because if my only issue is that mid-band has eked a tick outside of favorable large triggers, I'm willing to take a chance on that issue. David B., I love this trade. Strong work. Does anyone disagree? And it's okay to disagree because we can talk about it, right? I like it. I think it's a good looking trade, Dave. My favorite thing about this class is sometimes when you think you've done something wrong, you've done everything right, but if you never present it, how are you going to know? Why don't we choose the other wig? Help me out there, new trader. What's a wig? I'm assuming it's a typo. Tail instead of the medium trade? Why don't we trade the tail, new trader? Great question. Let me give you your answer. The wick. I got you. Thanks, Cal. Thanks, guys. Are you ready? New trader, that is probably one of the best questions you could have answered or asked. And here's your answer, and I want you to save this picture. When we're talking about those tails, when we're talking about those wicks, guys, those have happened. This wick, if you try to trade this tail, new trader, that market is long gone by the time it forms. Does that make sense? Remember that picture where everything that happens in one bar here happens in multiple bars here? I have zero idea, only looking at a 13-2 chart, where that wick has the potential to happen. In new trader, this is why we circle, because if I circle the tail after the fact, you'll see that very often it lines up with support inside of favorable large triggers. So how do I trade the tail? By taking an entry at the area of support inside of favorable large triggers where it is most likely to form. That area where the market is most likely to continue. Because the only thing that's happening to form this tail is price was starting all the way up here. This is a good lesson, I think, for you guys. We don't trade tails. We trade areas inside of favorable large triggers on the 5-1. This is where this pullback starts, right? Your 13-2 bar pulls all the way down to here. That's what creates the wick. When it goes beyond the halfway point and pulls back up, you see that black tail. Well, as it's pulling back, this area of support inside of favorable large triggers helps me identify where it's most likely to happen. Does that make sense, new trader? If I wait for this wick to form, this is where the market is, all the way over here. And that's why we refine it with that 5-1. That's why we use that smaller, faster chart, so that we can identify where it's most likely to continue. And that wick is after the fact. And that's why we go through and circle them after the fact. Because if I circle the wick, Safia, focus on your trading. I take 3 types of pictures typically. I take a pre-trade. When I activate a limit order, I snap a picture. I don't have to annotate it yet. When I'm in the trade, I like to take a picture if I have time. And then when I exit a trade, I take a picture afterwards. Safia, are you on Capture or Snagit? You're on Snagit, right? So what I'll do, whoops, I clicked the wrong link, is sometimes I have to go back. Third time's the charm on opening Snagit. So sometimes I have to go back. Where I've taken a picture, you can show your recents. I can go back and re-annotate. I can also go to my library. Guys, my library is like 3 months old. I've got over 3,000 pictures in it. I can go back and open up any one of these and re-annotate. I can go back and go, oh, I remember this one. This one was great. And I can get that screencast from a picture I took 3 months ago. Maybe I forgot to put it in my spreadsheet, and then I can go and put it in my spreadsheet. So focus on your trading. And then if you're on Snag It, you can always come back to it, Sophia. Termination condition still holding, isn't it, Sam? Guys, you're watching pre-FOMC fight. It's lunchtime in Chicago. Your 5-1 is showing you the fight between buyers and sellers, guys. Don't get run over. Don't try to be a shark. Two types of people in the market. There's sharks. These are the guys that move the market. These are the guys that create the momentum. These are the guys that respect the tops and bottoms, which is why we don't trade into them. And then there's remoras. Nexgen users, you're a remora. You're letting the shark do all the hard work. You're letting him invest his money. You're letting him move the market. You're letting him break areas. And we're going to jump in and take that little bit, that little piece of the pie, right? That little bit when we have the advantage. Guys, that is it for me today. Another great class. Thank you so much for participation. Remember, FOMC at 2 p.m. Eastern, guys. FOMC at 2 p.m. Eastern. It's fun to watch. It's crazy to watch. I wouldn't want to trade it. But it's fun to watch if you've never seen it, guys. Set your alarm clock. Come back and take a look. Crazy wild. Racha, watch the S&P at 2 o'clock. You'll find out. Chris T, chilling in Sarasota. Very nice. We may be there sooner than later. We're relaxing in Oregon right now. I have a feeling next winter we'll probably be pretty close to Sarasota. This nonsense of not playing golf for a couple weeks is killing me. And John keeps sending me road maps to get to his house. No, Gary. Airbnbs. I like that. It's going to have to be a White Claw or something. I had to give up beer. Hurts my belly. High Noons. Have you guys tried that? It's a vodka soda drink. Oh my gosh. It's amazing. They do, but I don't want to live in a car. There's amazing motorhomes. I don't want to live in one. The contracts that my wife does, they pay for lodging. So I'm in a 4-bedroom, 2-bathroom house right now. That's much better than living in a parking lot. Yeah. And they give her a rental car. So I don't have rent, I don't have bills, I don't pay for gas on her car, and I don't have a car note for her. She is, I'm not sure what locum is, Sophia. Every day. So my wife has been a director of surgery, OR manager, stuff like that. Yeah, so she takes contracts. Since our kids moved out of the house, she's almost 50. I just turned 50. Yeah. So we're going to travel a little bit and just kind of enjoy it. And then I'll settle down eventually. I'll probably get back to Texas before it's all over. But right now we're just bouncing around and having a good time and seeing all those things that we haven't seen. It's like Woodlands, D. Are you in the Woodlands? You were there last week? I used to live in Cyprus. We lived in Cyprus for 15 years. So we were in Cypress, Texas, Northwest Houston. I loved the Woodlands. It was nice. I actually opened up the Chewy's Tex-Mex right there off the highway. When that one opened 17 years ago, I was part of the opening crew. I spent 19 years with Chewy's. I was a GM for them over in the Memorial area. Bunker Hill, I-10 in the Beltway. That was my store. Forever ago. Then a couple spine fusions took me out of the game. So a little bit about me. That's how I ended up with you guys. The Novak curse on the back. 50s rock. I'm loving them. Claire, my 50s have been the absolute greatest so far. I love the 50. I love my 50s. My 30s were good. My 40s were better. My 50s have been nothing short of amazing. So I'm excited. Do you really, Michelle? Happy birthday. Happy birthday to you. Remember when you used to pop in here and play with us? I miss that. I hope your trading's going well. Guys, remember, FOMC at 2 o'clock. I'll be back tomorrow morning at 9 a.m. Follow your rules. Follow your rules. Guys, I'll see you tomorrow. Take care, everybody.